This video looks at two ways of calculating non-controlling interest. Is the parent that measures the non-controlling interest in the subsidiary, because it's the parent that's required to prepare consolidated financial statements. There are two ways to measure the non-controlling interest. The first is at the proportionate share of net assets value. It's where the parent measures the non-controlling interest as the proportionate share of its identifiable net assets of the subsidiary. Subsidiary does not get a portion of goodwill on consolidation because it was not there in the subsidiary. Parent paid for the goodwill on consolidation, and all of it is for the parent. Group shows only the goodwill portion that the parent has bought. The proprietary concept helps us to determine the non-controlling interest under the proportionate share of net assets value. The other is at fair value. It's where the parent measures the non-controlling interest at the fair value of the subsidiary. Because the parent paid its share of the fair value, it only purchases its portion of goodwill. The non-controlling interest keeps the remaining portion of goodwill. When the goodwill emerges in consolidation, the parent and non-controlling interest get their portions. The entity concept helps us to determine the non-controlling interest. In this example taken here, on 1st of July 20XO, Michael, an investor, acquired 80% of Samuel's business ownership for $500 million. At the date of acquisition, Samuel's business had $200 million of share capital, $280 million of retained earnings, and the shareholders' equity is $480 million, and machinery is $480 million. There are no liabilities, therefore the net assets are equal to $480 million. Michael had issued $500 million share capital, which was used to acquire Samuel's business. Required on 1st of July 20XO, that is at the date of acquisition, to show consolidation journal entries. Second, Michael parent measured the Michael subsidiary non-controlling interest as the proportionate share of net assets value. How much is the non-controlling interest? Third, Michael parent measured the Michael subsidiary's non-controlling interest as the fair value of net assets. How much is the non-controlling interest? First, we will look at Michael parent measured non-controlling interest in Michael subsidiary as the proportionate share of net assets value. Our consolidation entries here is based on the percentage of voting rights. Here, the elimination entry is on share capital 200 million. On that 200 million, Michael acquired 80%, and that equals to 160 million. And the retained earnings are 280 million, and Michael acquired 80%, and that equals to 224 million. And the investment Michael made in the subsidiary is 500 million. Therefore, goodwill on consolidation, which is the difference of debits and credits, is 116 million. The consolidation entries or the non-controlling interest calculation, some authors consider it as consolidation entries, other authors consider as non-controlling interest calculation. The non-controlling interest is at the date of acquisition. Samuel has 20% interest in Michael's subsidiary, which is 200 into 20%, 40, and then on retained earnings is 280 into 20%. It totals to 96 million. We can now prepare the consolidated financial statements. In that, we can look at the Michael parent and Michael subsidiary. In Michael parent, we see that Michael share capital is 500 million, and there is an investment of 500 million. This investment was used to purchase 80% interest of Michael's subsidiary now, and that's 200 million and 280 million. So our first journal entry is to eliminate the investment and apply against the share capital and retained earnings that was bought by Michael parent. So 500 million we credit, and we debit 160 million for share capital and 224 million for retained earnings. And the difference is 116 million, which is goodwill on consolidation. Our non-controlling interest is 96, which we calculated, and that 96 comes from is 20% Samuel's interest in share capital and 20% Samuel's interest in retained earnings. They together add up to 96. But there is no amount or no portion of goodwill on consolidation assigned to non-controlling interest under the proportionate share of net assets value. We'll now look at Michael parent measured non-controlling interest in Michael's subsidiary as the fair value of net assets in the subsidiary. So our consolidation entry, elimination entries, we have 500 million, which we had to eliminate, and then 80% of Michael buying of Michael's subsidiary now of 200 million is 160 for share capital, and 80% of 280, that's 224 million. The result is there is 116 of goodwill on consolidation. But this goodwill on consolidation of 80%, 116 is actually 80% that Michael bought from the previously Samuel's business. So if we look at the next journal entry, for Samuel, there is 20% interest in share capital still, and 200 into 20%, 40, and 20% interest in retained earnings, 280 into 20%, that's 56. So together gives 96 non-controlling interest, just like in the previous net assets value calculation. But there's an additional amount that we have to now assign. That's the goodwill on consolidation. So goodwill on consolidation is, we found here that for parent it was 116. 116 was for 80% of goodwill. So we divide 116 by 80% to make it 100%, and what Samuel is retaining of goodwill is 20% of that. So that equals to 29. So goodwill on consolidation, in goodwill on consolidation, to make it 100%, we need to add another 29 for goodwill on consolidation, and the non-controlling interest increases by 29. Our first entry was the elimination entry, 500 million investment is eliminated against 80% of Michael acquiring Michael's subsidiary share capital, 80%, and then retained earnings 80%, 224, 160 and 224. And then because of that, there was goodwill on consolidation of 116 that was acquired. Our second journal entry was to recognize Samuel's non-controlling interest. Samuel's non-controlling interest we first recognize as if it was measured at net assets value. If so, Samuel gets 20% of share capital, which is 40, and then gets 20% of retained earnings, which is 56. Together, that adds up to 96 non-controlling interest. But here, because it was measured at fair value, that there is goodwill that has to be assigned to non-controlling interest Samuel. So that amount of goodwill in our third entry, we calculated that, and that's 29. So we add 29 here to the goodwill on consolidation, and we add the non-controlling interest to the non-controlling interest, 29. So we can see our goodwill is 145 under the fair value method, and non-controlling interest is 125. If we compare this with the net assets measurement, we can see the goodwill was 116 and non-controlling interest was 96. So the difference between the two is because we assign additional goodwill to non-controlling interest because it's now measured at fair value. So under the fair value method, 100% of goodwill is included in the consolidated financial statements. That brings us to the end of the video, and thanks for watching.